Now, if there's one thing that a lot of investors or retail investors who invest in the stock market struggle with, is to analyze and try to determine if a company is a good opportunity to buy or presents the good opportunity to buy or not. And on this video today, I want to give you the 10 ways or quickest ways you can analyze any company and make a final decision. The reason why I'm making this video is because, well, I still receive messages from retail investors asking, how do I do this thing myself? How do I analyze? Which it is for this reason that I'm giving you this quickest way. Now, without wasting any more of your time, the first step is to check the company's financial health. This is where you check the numbers, the figures. How is the company doing? How has it been performing? What are their latest earnings and how did they perform? This is where you are checking your revenue growth, your profit margins, your debt to equity ratio to check if the financial health of the company it is good enough for you to make a precise decision. Number two, check the experience of management. In this case, you evaluate the CEO's track record, right? You check leadership team's experience and things like this. I know you might ask me, where do you get this? Well, website like Simply Wall Street will give you this kind of information. Simply Wall. If I don't forget, I'll put the link in the description below. So if you want to evaluate, check some of these things, you will get that information from Wall Street in terms of the experience of the top management or executives in the company, which will help you determining if this company is a good to buy or not. Now, the third step, of course, is industry analysis. Now, you need to also check how the industry is performing, how some of the companies in the industry are performing, and compare that against your very own company. I mean, you also check things like market size and growth. I mean, how the market is valuing this company and compare against their peers. PE ratio, PS ratio. This is where you check those things now. And if the PE ratio or PS ratio is lower than most of the companies in that industrial sector, then the chances are very high that that company is undervalued, only if it's performing or the financial health showed you some good things, right? So this is step number 3. Now, step number 4, stock's performance. How has the stock been performing in the last year or 52 weeks ago? Then you are able to analyze that and check, of course, the current price. And technical guys, this is where they come in. They will tell you about your moving averages. They will tell you maybe where is the good setup and whatnot. But at the end of the day, you need to know what is the 52-week low of the company, what is the 52-week high of the company, meaning that what is the lowest share price did the company find itself trading at, and what's the most highest share price did the company find itself trading at in the last 52 weeks. This is what basically you are saying. You are checking the movement of how this stock or the company you want to buy has been moving. Now, step number 5 is, of course, the valuation. I did touch a bit this one, I think, on step number 3, but right now this one, when you are analyzing the company now, you are talking about PE ratio, price to book ratio, and of course the PS ratio. And PS ratio works well for companies that are not profitable, but even the companies that are profitable, you can still check, which will enable you to determine if the company is a good buy or not. If the PE ratio is lower than industry average, but yet this company is performing good, it is a good opportunity to buy. It is a good company to buy. If the book value is below 1 or the figure you get is below 1, then chances are that that company is undervalued, which is something that, of course, offers the opportunities for you maybe to buy that company at a discount, right? So step number 6, right? You are talking about now the dividend. There are companies that pays out dividend, but I must say there are also companies that do not pay out dividends. Most value stocks, they do pay, of course, dividends. Like they don't expect to see much growth in the future. They don't still need to expand or need money from investors. They've done their best, and maybe it is for that reason that they start rewarding the shareholders in terms of giving them some good dividends. So you need to also check the dividend yield. The dividend yield is a figure that measures how much the company pays in terms of dividends relative to the stock price. Say, for instance, the company has got a dividend yield of 10%. It means that that company's annual dividend is 10% of where the stock is trading at that moment. Let's say a stock is trading at 100 rands per share, then it has a 10% dividend yield. The total dividend that the company pays will be 10 rands, because that is the dividend yield is 10%. So you need to check all these things. But in the stock market or in the market, you find that the people that chase dividends more than growth. There are those that chase growth more than dividends, and you also find those that like everything, like myself. I think I'm neutral on this. I've got stocks that pay me good dividends. I've got stocks that don't pay dividends at all, but the growth is massive because their future is looking so bright. So you need to also determine this. Now, step number 7 is, of course, this is now for the technical guys. It's technical analysis, right? This is where you're checking the trends, upwards, downwards, sideways, support and resistance levels, to maybe try to identify your entry point. Personally, I'm not a technical guy. I don't use this. What I use is more about the fundamentals. How is the company been performing? What are the latest developments on the company? What is the company planning in the future that will make their revenue growth? That's what I focus on, or I do the most. But step number 7, if you are a technical guy, you can always check, of course, the technicals and do an analysis to determine your entry points and exit points and all that, right? Now, step number 8 is the news and sentiment. You need to know what are the latest developments on the company. What is the current sentiment from big financial institutions or from big investors around the company? You can get that. I mean, again, Simply Wall Street will give you this information. How have the big financial institutions been reacting onto the company? Have they been buying? Have they been selling? But over and above that, there are some analysts that will make comments on some of these companies time and time again, which is where you need to go and read those articles and see if the big financial institutions are also positive or negative onto the stock. Because, I mean, let's admit it, they know more than us. They've got quite a number of they've got quite a huge experience as compared to us, and therefore I think we need to also listen to them, right? I mean, when they do this, they also give you their ratings. So where do they see the stock trading at, maybe in the 5 years? Sometimes they do that, especially in US stocks. They will give you, analysts don't just come and give you their sentiments without giving you, they are giving the stock or company a buy rating or a sell rating or neutral. And with that, they aid even the price target in terms of where do they see the stock trading at the next 12 months or right now, which is something that is always good, amazing, and you should, of course, also follow that. Now, number 9, I've touched a bit on this, but I want us to talk about it again. Compare financials and performance with industry peers. Now, this is also very important. When you are analyzing a company, being it financially, you need to compare other companies in its industry. How much of revenues are they reporting? And in terms of growth, what kind of a growth are they reporting? Is it 10% increase year over year, 50% increase year over year? And of course, if there is a company A that reported revenues that grew by 10% year over year, and this company B that grew the revenue by, of course, 50% year over year, the good company to buy, for this example, will be company number B, because the growth that they are seeing into their revenue, it's surpassing that growth that company A is seeing, right? Which, of course, you need to dig. It makes you to dig deep and find out more about company B, right? And then make a precise decision. So it's important that you compare companies against their peers to determine if they are presenting a good opportunity to buy. Now, step number 10 is that the volatility in the company that you are intending on buying or that you are researching, you need to know it, because some stocks are very volatile, meaning that the movement of the share price, today it might be at 5 rands per share, tomorrow it's at 7 rands per share. Then the day after tomorrow, it's back to 3 rands per share, which shows you that the volatility in that stock, it's huge in a way that if you are not ready for that, you might sometimes panic sell. You might sometimes miss opportunities on investing on a good long-term company. So it's important to check the volatility of the share price movement onto the companies that you want to buy, which that will result in you, of course, making a precise decision. When you buy, you know the type of stock you're buying. Otherwise, these are the 10 steps which I just thought I give them to you today on to how to analyze a company or how to analyze a stock. I know I might have left out some of the things, but I think most of the things by just these 10, of course, steps which I gave you, or these 10 key steps that I gave you to analyze a company, I think you should be fine, man. I mean, this is exactly what I do. This is how I analyze my companies, and so far so good, right? So yeah, tell me what you think about this. Do not forget, please, to hit that likes button, subscribe if you enjoyed this channel. I mean, if you enjoyed this video. I mean, it took me some time to compile these videos, and I really appreciate from the bottom of my heart if you can just hit the likes button, comment, subscribe, and click on the notification bell. Otherwise, with all that, I make tons and tons of stock market investing videos on this channel, and if you are locally want to know about latest developments on some of the stocks that are listed in the Johannesburg Stock Exchange, do make sure that you subscribe, you hit the notification bell. Otherwise, that's all from me, and I'll see you on my next video.